Good morning. Yes, thank you very much to all of you who got up early. I hope you had 1 or 2 coffees so that you're ready to follow along with the discussion today. As mentioned, I'm Ian Simpson from RULEMATCH with 3 very distinguished panelists today. I think it's interesting that we have these 3 gentlemen with us today since they represent 3 different groups, and that'll make the conversation interesting today. Robert from Securosys on the hardware side, when it comes to security and sovereignty, that is important. We have Jan from a base layer technology, the internet computer, and of course, Thomas from Sygnum, a financial institution. We're going to go through a few buckets of topics and discussion points, but let's start with the technology itself, since that's what it's all about, the technology. Blockchain as a technology that's taken the world by storm to some extent. AI now has a little bit of influence on how we think about things. But blockchain, when it comes to security and sovereignty, many people have made a lot out of that, the possibilities of blockchain technology. At the same time, people make the criticism that blockchain is totally open and transparent. Now there are some solutions to use blockchain differently. Where are we now with the actual use of blockchain for secure applications and for sovereign applications? I throw this out to all 3 of you gentlemen. Jump on it.
Okay, I'll start. Actually, welcome to this panel. Right, because if you think about blockchain, many people might have like a bit of a picture in mind. Mm-hmm. It's Bitcoin, right, where like everybody sees everything. Some people thought it might be anonymous, privacy, but it's actually very open. You can follow transactions. But to me, blockchain is not at all about that. To me, blockchain is a way to build a secure system. And so really, like, I mean, Bitcoin has never been hacked. Bitcoin, if you manage to hack it, there's like $1 trillion to be up for grabs there, and nobody managed so far. Yes, people had problems, right? They go to dumpsters to recover their seed phrases, but that's merely because the rest around it wasn't built very properly. But so the principle stands, right? So you can build a secure system from a protocol. So what we have done at the DFINITY Foundation, we've taken this principle to really like build a full-fledged secure system. Mm-hmm. It's also why we spin out Utopia, in the sense, okay, here's a protocol, either use it on a public network or even use it, as a private network to build secure systems. Mm-hmm. So, I mean, obviously, you can't change the world overnight, but I do think that's actually the right approach to build systems. Current IT systems are very broken, and I think all the financial institutions have that problem, right? Like you started from a mainframe somewhere that then like drilled holes into it because it needs to connect to the rest of the world. And so we have a very patched up system. And so if you want to fix security, blockchain is the answer, but not Bitcoin, but more like 3rd generation protocols such as what we have built. Mm-hmm.
And so we have the technology, the base layer technology. Then you have certain things above and below that, right? You talk about other systems, Robert, from a hardware perspective, but then also in a financial institution, you have to connect that to different things. How has that gone so far? Where are we with, connecting legacy systems and core banking software, shall we say, to blockchain systems and so on?
Yeah, so maybe like for us as a regulated bank, this is definitely a challenge. That on the one hand, we have more, let's say, the traditional world of banking. As you mentioned, we have core banking systems. We have, let's say, the traditional finance networks and ways of working. And then on the other hand, of course, we have blockchain. And I mean, we see ourselves a bit as a bridge between this old and new world, because I think over time they have to sort of integrate with each other. So I don't think we will have, let's say, the new world of blockchain and completely separate the old, let's say, the old world. So I think the key to mass adoption is really to bring them together and to sort of take the best of both worlds, and of course also, let's say, introduce the new world of blockchain and how it works in a kind of decentralized and public and permissionless way to the, let's say, to the traditional world of finance, which obviously works very differently. So I would say it's certainly a challenge and something that we in a way struggle with every day, but I think it's very important to bring those two worlds together.
Mm-hmm. Yeah. Robert?
I mean, for me, I don't really care. We're providing base layer security with our hardware security modules. We're securing the Swiss interbank clearing system. So with our HSMs, we just renewed our contract for another 10 years. They're not doing blockchain yet. On the other hand, another big piece of our business is blockchain. Anybody who's doing custody the real way is using our HSMs, and so. Whatever goes, The interconnection, I leave it up to the banks, how they do it. So,
and DFINITY, and you use the term third generation blockchains, are trying to take that to the next level of, facilitating things for financial institutions, but then also even for more decentralized applications, right?
Right. I mean, actually, since it's essentially the protocol is a distributed. Replicated distributed computing network at the end of the day, right? And then user applications are on top of that. And obviously, interacting with the user is very important. And I guess, today most users have this as user interface, but luckily already here we have made a big step, right? There's passkey technology now in here where users don't have to remember seed phrases. And that's also stuff that we're building. There's threshold keys on the network, so users can have Bitcoin on the network, and then you can separate like what you guys do too, right? You don't give the keys out to the users, but you store them securely either in HSM or threshold crypto over a whole network, and then on top of that you build stuff that the users can interact with, or there can be a bank, right, where the users don't want to handle it, or it can be a smart contract where you can, with your keys from your mobile phone. So I think the last 5-10 years we really made huge steps towards making all that easier.
Mm-hmm. I mean, it's a little bit a challenge between sovereignty and security. Mm-hmm. So
you have both.
So think about it. So in the start, the Bitcoin guys were really fond on their USB sticks. Until they figured out they don't really last that long, and you need to have backup. And what do I do? And there is more Bitcoins lost, I think, than there is Bitcoin floating around. So then if I give up my sovereignty, I give it up to the bank, who does the custody for me. And that's kind of Thomas' business, so doing that securely. And now the question is, can you trust Thomas, and how much of that control and sovereignty can go back to the customer, and so these are systems that we, for example, enable, so that the bank, not by itself, the bank holds the keys for me, but the bank cannot spend them by themselves. Systems like that is enabled by our technology.
Mm-hmm. But you're only enabling that for the institutions, not for the individual.
For the individual, it's of course, if you're a high net worth individual, we can do that.
You want your own HSM at home.
But basically, we're building the base layer technology. The system on top of it, how easy it's to use, how well it works, how good it works for the customer, that's something the banks can do much better than we are. We are a small technology company who keeps the keys secure.
So in that sense, for the end user, for the world in general, if you want to put it that way, things haven't moved forward that much.
I tend to disagree, right? You can go to oisi.com, which is like a secure crypto wallet browser only. Your authentication goes with the passkeys. You can have multiple devices there, and it sort of separates the layer for authentication from the threshold keys, by smart contracts. So I think here, I mean, HSMs are the way people used to do that, and I guess there's still a play there, but maybe beef them up a bit. But I mean, the higher up you go to the stack, the more flexibility you provide. And I think here really blockchain is a huge game changer, because like a smart contract, it's not really a smart contract. Well, yeah, it's also a smart contract, but the name is really misleading, because it's really like a new, more secure way to do software, right? I mean, like a smart contract can't be hacked, and now you can use that technology. That's like what blockchain is all about. It's about securing the system, and like a new building block, a new tool that just makes it easier to build stuff. Also, like users can interact with from their phones if they want. So you can separate all of those concerns. I think that's like really a huge deal.
And going back to this topic of can you have sovereignty, security at the same time, like, are we going to look and see another step forward in this sense, or are we just going to kind of slide back and it's going to continue?
Yeah, maybe. So I definitely think you can do both, and I think what the blockchain makes possible is that you can do self-custody, and there are a lot of tools out there. And in the traditional world of finance, this wasn't possible. You had to trust and depend on financial institutions, that they were kind of like a gatekeeper, and there was just no other way. And with blockchain, you don't have to rely on financial institutions. You can do self-custody. You can use something like Uniswap, where basically there are no financial intermediaries, just a smart contract that runs sort of autonomously. But of course, some people, they don't have the expertise, they don't have the time, so they still decide to work with an institution, which obviously is also great. But I think for the first time, you have the option to do it yourself and to be really self-sovereign if you want. And I think that's a really, really big change, and I think really changes the way finance works.
I mean, you could still be sovereign with stacking cash under your mattress, So
you're a bit limited, but of course,
that's comparable to having USB sticks with Bitcoin keys, So
yeah, but even as an individual, I guess you could be a bit more sophisticated still than a USB stick. Yeah.
Maybe let's throw this in there, because we're talking mostly here about storing value, assets, money, but then there's also data, just plain data, right? And that's also now becoming more and more a topic, right? People want the sovereignty and the security of their data, whether it's at a financial institution or it's their health data or different things. Is blockchain really changing that side of things?
I think very much, right? Like that's also what Tracy mentioned before, Utopia, right? Which is a spin out of the technology, because now the Internet Computer Protocol is just like one, technology, right, that you can use in many ways. And it's a much more, as I said already, much more way to build a secure system. And now you can also do that yourself, right? Today, many people, if they want to use people move their software into the cloud, right? Banks as well, because it's easier to manage for them. They don't have to worry about a lot of that, and they want to offload all that IT management. But also then giving up a sort of control over their data to that cloud provider. Sometimes, wherever the software comes from, like typical Google, Microsoft, Amazon, it might come with some backdoors. Who knows, right? Like you give out control to data to other parties, and I think here blockchain can really, as a technology, play a huge role. Where you say, okay, so I'll just manage that myself around the blockchain protocol myself. Now I have a secure system that provides me this cloud technology, and I get back sovereignty over my data.
Yeah, I don't know the systems yet with blockchain, but the public cloud providers, the Google, the Amazons, the Microsofts, they all build systems right now that let you store the data in their clouds, but you can keep the keys separate. And so it's in Microsoft for Office, it's double key encryption, where you encrypt your document on your laptop, it goes encrypted in the Azure cloud, and you keep the keys. Mm-hmm. We built a system to secure these keys for you. Similar for Amazon, it's called XKS, External Key Store. In Google, it's called External Key Management, EKM, and so on. There's all these systems, and it's really one of these problems that we have, that all these cloud providers are American. And
Huawei, right?
And some are Chinese, and there is this European thing that we have this regulation that the data has to be under your control and cannot be accessed by somebody else if it's GDPR related or health-related or financial data that you actually don't want to give out. So they all figure out systems to do that, and that's something we as Securosys started to make possible, so that the XCaaS just works with our HSMs, and you have the keys under your control. The data is encrypted in the cloud, and only decrypted when you need it.
So there is some advancement, but then the sovereignty of nations and places is maybe not quite to that level. Let's jump over and focus specifically around financial institutions, since we have one with us, and maybe that is a bit at the focus today. It all comes down to holding the private keys. Now, Sygnum is shall we say, a crypto-first bank, built from the ground up for dealing with crypto assets, but many others are not, and they're dealing with other assets and different things from legacy systems and legacy assets, plus now new things with crypto. Where are we with financial institutions' understanding of how to deal with the security and, eventually the sovereignty of these things?
So I would say we have come a really long way. Today in Switzerland, you have companies like PostFinance offering crypto to their clients. One of the largest retail banks in Switzerland, which was, I would say, almost unthinkable just a few years ago. So I think we have come really far, but there's definitely also still a lot more room to go further. And you mentioned sort of custody, private key management. This is of course one important topic, but it's also quite a technical topic. And many banks today or financial institutions, they also decide to work with a partner for custody. And if you do that, then you don't need to understand all the technicalities. I find it equally important, besides the key management, that banks also understand all the different aspects of blockchain and digital assets. For example, if you think about the private bank, obviously it's important that the relationship managers or the client advisors, that they are able, or that they understand digital assets so they can advise their clients on digital assets. Or if you think about the compliance department, obviously they need to understand how a blockchain works, how you can sort of trace the assets on chain. So custody, key management is certainly one area, but I find it important that banks, that not only, let's say, the custody department understands blockchain, but that you really have this knowledge in all the different areas of a bank or a financial institution, so that you really understand not just one aspect, but really look at it from a, let's say, holistic way. And I think in all the banks or financial institutions in Switzerland, you have sort of pockets of knowledge all over the place, but we are still a bit away from having a really thorough understanding across all the institutions.
Mm-hmm. Robert, would you agree? I suppose you're trying to educate some people at the same time.
Yeah. So every other year there's a new fancy word that's out there to do stuff. I have to agree with Thomas. The custody is one thing we're doing. We're keeping the keys secure and this, but then it's really up to the banks to figure out what they want to do on the service level, how easy they want to make the systems for the customers, and how many services they want to offer. Are you going to do staking? Are you going to just have a regular crypto trading and so on? For us, the only problem is, there is a new currency, there's a new algorithm, we built the algorithm, add it to our system, and that's it for us, But then dealing with it, do we really want to have coin new on our system or not? That's the bigger problem that they have to face.
Mm-hmm. Yeah, and I imagine you would be involved in quite a bit of education.
Well, right. I guess you see from the discussion, right? Right now we're talking a new coin, right? Maybe let's Bitcoin add to the systems. Whereas, of course, we are thinking about much more fundamental, right? So saying, well, actually, let's build a whole new way to deal with the systems. And at the end of the day, yeah, of course, if you have like a custody system where you can manage the key, but if the system breaks, where you actually can transact or like execute the transactions of all of those things. Like HSMs don't help. Like whatever cost that doesn't help. So you really need to look at the whole stack. And obviously, I mean that's like. I would say, well, you guys just build everything on ICP and you're good, right? It's not that easy, right? Because there's standardization, FIPS, all that kind of things, and also you don't change your systems overnight. So that's, I mean, it's like step by step, right? And I think it will take a while to solve some of these problems. And yeah, of course, like dealing with coins and costs is one thing, but I think that then when you talk about real-world tokenization, real-world assets, all that kind of stuff, where at the end of the day, you need to do more on blockchain for this to make sense, right? And so I guess costs is just the first step, and then you think about, okay, can I also execute some of this negotiation, or whatever, just like go up in the stack.
That's kind of where you go into confidential computing, and have trusted execution so that nobody can really deduct anything from your stuff, what you're doing there. So, which you don't want to do in AWS, for example. And so, because it's again an American company, sorry.
But that's really what we're trying to solve. Again, you don't have to port your systems overnight, right? You can start with things, manage your tokens first, and then maybe manage more transactions, manage real-world assets on that, where you have proofs that the building is still there. I mean, like we could discuss forever about some of these applications, but I think that's really where things will go, and where blockchain can help financial institutions a great deal.
I can imagine one, and let's dive down into a few more details just around financial institutions. Speaking from experience, having worked previously at a large crypto broker in Switzerland, you have, of course, individuals, very maybe crypto native, sovereign individuals who have these assets, and they want to give some of that control to a financial institution, but at the same time they want to keep some of that for themselves. So you have this back and forth between the individual and the institution. And then you have to set up your systems and your processes and your whitelisting of addresses and all of these kinds of things. That's a very difficult system to build, to keep secure, and to also keep the customer happy, right?
So, for instance, we have it's called a project called Orbit that we've started. That's actually how we manage the endowment of the foundation. It's like a multi-role system. So again, because you separate the keys, the signing with those keys, and how you execute transactions on top of that, and then. Because now it's a smart contract, like a secure way to manage that, and you can specify roles. Essentially, like for I guess some of you might know all of this like enterprise rules management kind of thing, compliance. You have these rules. Now we can actually code them in smart contract, and that's maybe an example as well, right? Where as an financial institution, you can have that part on the blockchain again, and then manage that, and that would even allow the bank maybe can manage transactions of this kind or that kind of volume, and you as an individual, maybe you have the final sign-off once in a while, right? And I think there's a lot of room here, and I think again, blockchain technology can actually help some of that, right? Where end users go with their phones, log in, the bank manages some of that. So I think there's many things to come.
So we pretty much have a similar system, pretty much. You can take the private key and attach rules to it. So which the rule is 2 out of 5 have to sign for this, plus 1 out of 3, 2 traders, plus 1 compliance officers to use the key. You can actually add whitelisting to it. You can actually add time rules to it, and makes it more secure. And we don't build the whole application stack, but we have a demo system where you actually can take out your phone and approve the transaction, and everything then goes into the hardware for us, which then is inside the hardware is verified. Okay, did everybody approve? Do we have a quorum? Did they actually approve the same transaction as we want to use the key for that transaction? Does it have a few zeros less? So things like that. And then only then the transaction is signed by the HSMs. And this is stuff that, for example, Sygnum is using, and quite a few other banks, to make the system more secure.
But did I understand that there's hope, perhaps, that blockchain can replace the compliance department? Is that somehow the end goal here, like reduce the compliance?
Somebody has to do the rules, right?
Well, okay, write them once and then that's it. No,
that was the intention of my engineer, to get rid of the compliance officer.
Probably not, right? One other topic, and I brought this up to Thomas before the panel. When we talk about security, there's often when you move from from the institution to the individual, there's a risk, right? A human failure, or there's other areas crossover where there can be risks, transfer of data, transfer of information. One big risk and security problem in the past with crypto assets has been on exchanges, where Mt. Gox and other hacks happen for different reasons, maybe different weak points. Now we're starting to hear about some setups where there is custody off an exchange, but then trading on exchange. And how is that developing, Thomas? What do you hear about that?
Yeah. So first of all, I think it makes a lot of sense to segregate these functions, because obviously when some of these centralized exchanges were created, there was no ecosystem, there was no settlement network. So basically they had to put everything under one roof: the exchange, the custodian, the settlement. But I think today we have custodians, we have settlement networks. So and obviously we have also seen that it's not a good idea to leave your assets on an exchange. And I think one thing that is interesting, if you look at the decentralized space, there this is already in place. You can use something like a Uniswap or another AMM on another blockchain. You can use a lending pool, and you never have to give your private key to anybody. So there it's fully non-custodial. And I think this will also happen in the centralized space. Obviously, I think the end goal should still be to move as much as possible to a really on-chain, decentralized way of working. But before that, I'm sure we will see exactly what you said, off-exchange custody. Already today, many big exchanges, they offer off-exchange custody, so you can have your custody with a custodian and still use the exchange for trading. It's still a bit, let's say, a bit niche topic, but I'm sure this will come more and more. Also, because the regulator will require this, especially in the US. You have something called the SEC custody rule or safeguarding rule that is exactly asking or requiring investment advisors to work with a separate qualified custodian. And I think this will also happen everywhere. And I think it makes sense to have this clean separation or segregation between the custodian, the exchange, and also the investment advisor.
Mm-hmm. Robert?
It's if you look back, a lot of these exchanges, they were just cobbled together quickly, and security was not the major concern. Actually, was no concern, because it was all about getting more business on the exchange and make money. This is changing quite a bit also because of the regulators that implement or restrict what you can do and how you have to secure your exchanges. For example, in Hong Kong, there came up quite strict regulations. And for example, there you have to use HSMs. Mm-hmm. It's mandated, and we're one of the 2 HSM vendors that actually is approved for that. So, mm-hmm. So that was the bragging part of the...
I get it. We talk here about regulation, and we didn't plan to talk about it, but regulation always is a topic, right? For security, also for sovereignty. If you think about things like open banking and sharing of data and where are we with that? Nowhere?
Das Leidigthema.
Well, I guess, the whole space was very unregulated, right? What you see what happened with FTX and all of that kind of stuff, right? Obviously, some of these areas are still very young. And also you see like exchanges fully on-chain on ICP, like ICDEX, Helix is one of them. They're almost fully on-chain. But obviously then also you need to start taking care about some of these regulations, right? You can't have like a complete Wild West. And the question is like, how do we adopt there? I mean, the EU is drafting some regulations. Some of them are, I guess, and not where I would like to see them, because they also have a bit of a particular understanding of blockchain technology that might also be somewhat outdated, right? But I guess that's just how the space has to develop, and I guess actually we're now working on like KYC fully on-chain, such that you have AI on-chain that can recognize your face, recognize your ID card, so that actually you can do some of that regulation. Also, like on-chain DEXs, you get the security from like what you just discussed, some parts on-chain, right? And then maybe financial institutions do the KYC, or you have it on-chain as well. So at the end of the day, if the technology is to stay, then it also, of course, needs to be according to some regulation. And of course, these regulations have to be drafted up at some part, because like very often regulations so far off that either they don't help at all, right? Like the consent like for GDPR is like one of those examples. Now you get like a page of that fired up whenever you log into a website, and you just say, well, accept all. To me, that's like a very bad example how regulations work, right? Hopefully in this space we can do a better take at these regulations and get on to secure on-chain fully exchanges. And like Uniswap, of course, is not there either, right? Because they have like some smart contract in Ethereum, but the interface lies somewhere else. And then, of course, like Uniswap is very much under the influence of the American regulations, which have a strong view there. So I think we still have some way to come here, but we're going into the right direction in any case.
Did you want to say something, Robert? Do you prefer not to?
You're just opening another hole there with privacy stuff. When I have my identification on the blockchain, that's like.
Oh, you shouldn't have the whole idea on the blockchain. I think that's actually. There's encryption stuff, right? You can totally do that. So
it's got to get more and more complex in that sense. It's sovereignty, privacy, and.
Actually, should get less complex. I think traditional IT systems are complex, organically growing.
Ideally,
less chance to do it better, less complex, right? Because
ideally, maybe regulation would regulate sovereignty in such a way that you can do things yourself on chain by yourself. You can do it with a financial institution, but the financial institution can't lock you in and keep you from doing things that you want to do yourself. Or is that too much of a dream?
I'm quite hopeful for the Swiss regulators, to find out something reasonable. But when I look at our neighbors in Europe, whatever they can regulate, they regulate to death, So now we have no more AI in Europe, So thanks to regulation.
Yeah.
But I agree. Switzerland is really like the place to be. Maybe who can save Europe, because like all of the EU.
We can try.
There, right? And here in Switzerland, we have a better approach. It's also smaller. People know each other better. And regulators actually listen, right, and try to understand technology. Where in the EU, that's a bit different, I think.
Let's look a little bit to the future and think about, the next generation, or what may come. Also going back a little bit to the technology, I think ICP looks very much to the future, 3rd, 4th, 25th generation applications. But from a hardware perspective, you also have to keep up with things.
Yeah. I mean, we're in this business now for 10 years. We just reintroduced our latest platform for this. It will actually be possible to also participate there in the ICP. Our big deal right now is the quantum computer. The new algorithms to secure against quantum computers. So this is a big change that's happening there. And then a lot of this stuff is. Nobody wants to run hardware anymore, and so we have to provide everything as a service. So that's kind of where we are.
I'm sorry, you just have to make more business and do everything for everybody else, right? Yeah.
It's let's do the business, the part that we can do well, and not get into. We're not good in banking, so let's do the banking, and figure out what the customers need. We're doing the security.
Interesting that you mentioned quantum computing. I had a chance to talk briefly to Thomas Moser from the SNB a few weeks ago, and this is one topic he personally is focused on researching and understanding what the implications of quantum computing will be. Is this something that you're worried about, thinking about, planning for?
I mean, obviously, it's all about the cryptography here, right? So, we all know that like the elliptic curve crypto, discrete logs, factoring, all of the kind of stuff is easily broken by quantum computers. Right now, that doesn't steal my sleep, right? I mean, like, I used to tell this story, like 30 years ago, I was at Aarhus University and I went to see the quantum computer they had built. It was like 4 qubit that could be stored for like millions of a second. I forget the exact number. When I left IBM 6 years ago, I also went to see the quantum computer. It was like 51 qubits at the time. And the problem is like these things need to scale up, right? If you want to break crypto, they need to be much larger. But of course it only takes one, right? It doesn't have to have like a quantum computer on every desk to break it. But of course, the key point, I think that's what the industry is doing. It's like what cryptography call crypto agility, that you specify, like an encryption algorithm, a signing algorithm, you build your application to just use that, right? And then of course you have to build it in a way that you can swap in and swap out some of those algorithms, right? And so from that point of view, yes, that's what we have to do. But I think the industry knows that since so long, and at some point you just have to start swapping out these algorithms. And a lot of people already do that because right now, I mean, signing is not a problem. It's really encrypting. If you want to have an encryption that lasts for the next 100 years, then you better do something that's secure against quantum computers. So people are moving there, but to me, it's not stealing my sleep.
Not yet.
Yeah, it's this quantum computer is coming in 10 years. That has been the case for
The last
30 years.
Yeah. I imagine Sygnum will just hire somebody to help them figure it out. And no,
I mean, of course, we work closely with partners because in a way we are also users of the blockchain, and this is something that needs to be solved at the blockchain level or at the hardware level. So, of course, it's something that we follow closely and also discuss with our partners and blockchain projects how to tackle this.
But really, the case is most blockchain systems are based on elliptic curve. Elliptic curve will be broken by a quantum computer, not the ones we have now and not the ones we have in 5 years, but who knows? It's called a black swan event, if that really happens, And then it's also in the blockchain systems, you have to figure out, okay, can we migrate our blockchain to something that's post-quantum computer cryptography,
Yeah. So probably cooperating and collaborating will be key since everybody will be kind of in the same boat, more or less.
Yeah,
going forward.
But again, it's crypto agility, right? I mean, you have to build your system so that you can swap in, swap out the algorithms. I mean, some of the blockchains are not built like that, but on the other hand, it's not so hard to do that either.
Yeah, with a good quantum computer, I can unlock all those bitcoins, that lost.
I won't encourage you to try that, but if you do, come talk to me later. I think we're going to wrap things up there. Thank you very much for listening to the first panel today. Let's give a warm round of applause to our panelists.
Thank you.